So I'm going to be sharing with you the step-by-step game plan on how we're planning to absolutely crush the SPY and finish the week very, very strong within the green. The SPY is currently setting up for a very predictable trading opportunity to make money potentially both ways. I'm going to walk you through step-by-step on how to trade the SPY, breaking down the best levels of interest where we're planning to trade the best setups at. I'm going to begin straight into the analysis, and then towards the end of this lesson, I'm going to be sharing with you the number one stock that I'm planning to watch and potentially trade heading into tomorrow. You guys are well aware in terms of Friday, we're going to have many stocks with the zero dates expiring, so there's going to be a lot more opportunities than just the SPY. Let's get straight into the analysis. Towards the end of this video, I'm going to be walking you through the trades that we ended up making inside of Team Roar. Now, in terms of the overall SPY daily chart, this is what I want you to be aware of. We're going to start off with the daily chart foundation. Then after that, I'm going to break down the 10-day, 30-minute chart, showing you the patterns that I'm seeing. So in terms of the first daily chart foundation, what I'm going to do is I'm going to compare this daily candlestick right here to this daily candlestick right here. You can see the SPY ended up gapping up. The SPY ended up gapping up. The daily candlesticks look identical. It's at similar prices. Now, the next day, the SPY ended up forming this red bearish pin. The next day, the SPY ended up forming this red bearish pin. The day after that, the SPY had a gap up, and it had a very strong bullish trend day and a small drop into the close. With that being said, based off of this pattern, if the SPY gaps up, opening up higher than the previous closing price, 591.64, it can potentially have a strong bullish trend day where you can even look to leave runners that you're buying towards the market opens if you're seeing bullish 30-minute candlestick confirmations slightly above the previous closing price and the break and retest levels that I'm going to be sharing with you. So in terms of the break and retest levels based off the daily chart pattern, the first level is going to be slightly above the previous closing price. We closed at 591.64. Right now we're at 593. The SPY is attempting to gap up. In terms of the first zone, as you can see right here, there was some small resistance at 592.30, and then there's some resistance right here at 592.80. That is the first zone for the break and retest to buy calls if the SPY is forming a floor, if the SPY is forming support, if the SPY is forming bullish 30-minute candlestick patterns at that overall zone. Now, in terms of the higher zone, where you can use this strategy as well, the higher zone is going to be right here. 593.50 to 594. And then the final zone is going to be towards this 595, right? So obviously we're going to be more focused on the oversold levels. You can try the higher levels if you're seeing a great confirmation on the 30-minute chart. And then in terms of just a ladder to give you, if SPY keeps on reacting bullish at those overall levels, in terms of just the ladder, where these are the more overbought levels where it'd be heading to, the next level above that, 595, 596, 597.70, and then 599. And then the best level for put options would be towards that 599 and also towards this gap that is waiting to fill above at 601.30. That is the game plan if the SPY is gapping up. Now, even if we are gapping up, in terms of a break of trend where the bears take control and the SPY flips from bullish to bearish, what would need to happen is the previous closing price would need to react as a resistance level. So in terms of the level that I'm going to be going with the overall zone, if you are seeing 591 to 590.50, right? Slightly below the previous closing price. If you're seeing a breakdown, a crack below support, lower highs are forming on the 1-minute, 30-minute chart, strong resistance is forming in between the zone, the trend is going to shift from bullish to bearish, even though the SPY gapped up. So like I said, man, if the SPY gaps up, the focus is calls at those levels that I gave you for the break and retest. Now, if the trend flips to bearish and we start cracking below 591, you can attempt puts. Just be a little bit careful in that situation if we are gapping up. Now, this is the second daily chart foundation that I want to lay out for you here. So I'm going to walk you through this one. So in terms of this red daily candlestick right here, I'm seeing a lot of similarities where it looks like this one, right? Just a smaller overall version of the price action. and it also, in a sense, looks like this one. So in terms of what can happen as well, if the previous closing price reacts bearish, what's going to try to happen is the bears are going to have a quick flush, likely under the previous day lows. And in terms of where we ended up bottoming today, we ended up bottoming towards this 591. So if we do end up going below that previous closing price, we can flush under previous day lows and we can quickly drop to the following zone, 589 to 587.30. That's what I'm seeing on the daily chart if the SPY is gapping down or reacting bearish. And it is showing based off of that overall daily chart pattern that, if the previous closing price slightly under that is reacting bearish, you can try a quick scalp on puts if it's forming lower highs for a nice flush, towards that 589 level. But later on into the day, it's going to try to have a bullish reversal. Now, in terms of the oversold levels, where we're going to be interested in buying the dips if SPY is reacting bearish at the previous closing price, these are going to be the oversold levels that I'm going to be watching. The main zone is going to be this 587.50 to 587. The level below that is going to be 585. The level below that is going to be 583. The level below that is going to be towards this overall gap for a gap close reversal towards the 582 range. Those would be the key oversold levels where if I'm seeing the SPY during the middle or during later into the day into the close, if it's reacting bullish, I'm going to be buying call options towards those overall levels. That is the overall game plan. I explained to you what to do step by step. It's very simple. I strongly believe that tomorrow is going to be a lot easier to trade than today. Today was very, very choppy in a sense. Tomorrow should be a lot better, and the moves should be a lot bigger and more volatile. Friday is going to be fucking crazy. Now, in terms of the patterns that I'm seeing on the 10-day, 30-minute chart, this is what I want to bring awareness to. So I'm going to walk you through these overall patterns right here. So what I did was I broke down the daily chart and I laid out to you the levels with the daily chart foundation. Now, I want to explain to you the overall patterns that I'm seeing that are solely based off of the 10-day, 30-minute chart, right? So this doesn't have to do with the daily chart foundation, but the levels can correlate with it, right? So in terms of the SPY, you can see right here, it's kind of just crunching sideways. You see how it's just crunching sideways to the downside, right? So in terms of how that kind of looks in terms of like similarities, I mean, you can just compare the following, man. It looks like this. It's going up during extended hours, and then previous closing price is reacting bearish. It has a sharp flush, right? So the point is, man, if the previous closing price is reacting bearish, it's going to be flushing towards that 589 to 587, right? So again, just in terms of like comparisons, you can see it's kind of crushing, right? Crunching, to the sideways, flushes under previous closing price, starts to sell off, and then bullish recovery, right? So if you just look at this overall pattern right here to this pattern right here, there's a lot of similarity. So if it's forming lower highs, if it's dropping below 591, it's really going to try to flush first and then bottom at the key oversold levels that I gave you. So like I said, man, if you just compare this overall thing, and this is another thing that I want to bring awareness to, this is another possibility. So we have this nice move up during the extended hours, right? And it does end up gapping up, but the 30-minute chart is red. So if we gap up and the 30-minute chart is reacting red and bearish, and we're going below previous closing price, is going to start to flush and then have a reversal. So again, even if we are gapping up, if you're seeing red bearish 30-minute candlestick confirmations, and we're just failing to go above like this 594, 594.50 zone, and we're just starting to sell off at open and we go under previous closing price towards open, is going to try to flush towards that 589 level, right? If you just look at the comparison right here, like I said, man, just look at this overall straight line up. So I'm going to show you, I'm going to walk you through this, man. Just look at this overall straight line to the sideways, straight line to the sideways, and then it quickly reacts bearish at the open and goes under previous closing price. If that's the case, flush first, then reversal, even if it gaps up, right? And then in terms of this one, this is the crunch. So if we're just crunching and previous closing price reacts bearish, then it's going to sell off. If we're gapping up, and if previous closing price we're holding above that, reacting bullish towards the 590, towards 593s, it's really going to start to fly up for the bullish trend day, right? This is what I'm talking about in terms of the gap up. Crunching to the sideways, crunching to the sideways. If you're seeing, you see how it's crunching here, you see how it's crunching right here, a lot of similarities. If you're seeing just like a lot of support forming, a lot of strong, healthy consolidation, a lot of strong floors forming during normal trading hours, during extended hours, nothing too crazy towards the lower levels, it's likely going to be a strong bullish trend day. So those are the three patterns that I wanted to bring awareness to in terms of the 10-day, 30-minute chart. Look at those three patterns, man. You need to pay very, very close attention to January 7th and very, very close attention to January 8th and January 10th, and then also right here towards January 14th, right? Look at those 30-minute charts very closely on how they all developed during the pre-market session as well in normal trading hours. Now, that's the overall game plan for SPY, and that's what you should be focused on trading. Now, in terms of the number one stock that I'm watching, there's many stocks that are going to be on my radar heading into tomorrow. But in terms of the number one play that I'm seeing, we had a member in the Roar chat. He ended up, posting this. I was asking members what stocks they're watching as well. So this is the one that caught my attention. So what I'm seeing on MCD on McDonald's is this could be a delayed reaction. If you compare this chart, so what I'm going to do is I'm going to show you the daily chart on MCD, right? So it hasn't really been following the SPY. Now this could be a delayed reaction where eventually it starts to follow the SPY. Look at this overall pattern. If you look at MCD, it has this massive gap down, and then there's this oversold gap right here towards 278, previous resistance to react to support, right? And then if you look at the daily chart confirmation, the daily chart confirmation is confirming that MCD is trying to have a gap close reversal. It's trying to reverse at this previous resistance where it had a gap and go and break and retest to react to support, right? And there's a gap right here that was waiting to fill. And if you look at this daily chart candlestick right here and you compare how MCD stock reacts with that same daily candlestick when it forms its support, you're going to see right here. This is the same daily candlestick. This is the same daily candlestick, right? And it's towards similar levels, but it's even better now because it's at more oversold levels with a better technical strategy. Break and retest, previous resistance to react to support, gap close reversal. And if you just look at how it reacted when MCD formed that overall candlestick, here it is again, man, you're going to see it was bullish. It was even bullish at the overbought levels. Look at this. It closed a gap right here, formed the red candle, just like it did the oversold level. Next day was a bullish trend day. Next day right here, bullish trend day. Next day right here, bullish trend day. So this is the number one setup that I'm seeing from a technical view. And if you compare the daily chart to MCD to SPY, you're going to see it's the same setup where SPY ended up bottoming out, which is the setup I put you on into the beginning of this week for the gap close reversal. You're going to see right here, the SPY has been having gap downs from 606, from 601, from 589. It hit this key previous resistance level, break and retest gap and go zone. And there's a gap that's waiting to fill below right here. Once the SPY filled the gap and it formed a bullish trend reversal candlestick, same bullish trend reversal candlestick it ended up forming right here. Same bullish trend reversal candlestick it ended up forming right here. Overall, it started to have a bullish week, which is why I was telling you to focus on calls at the key oversold dips if it starts to retest previous day lows, key oversold dips if it starts to retest previous day lows. So if you compare the SPY setup to MCD, it's the same exact setup. And tomorrow, I'm telling you, you're going to want to be focused on trading MCD. So I'm going to give you some oversold levels to focus on, and then I'll give you the higher levels. So in terms of the oversold levels to focus on MCD, keep an eye on this like 278 to 278.50 zone. In terms of the next level, a massive move is going to occur at 280.20. If we can break above 280.20, react to support, we're heading up to explode to fill the gap at 282.30. Next level above that is going to be 284.50. Hold the calls for the bullish trend day. If you're seeing strong support 30-minute candlestick confirmations on the SPY and MCD, you're going to want to be holding calls, leaving runners. That is what the best setup looks like at the best price. I've scanned through thousands of stocks, and what I'm telling you is, in terms of my curriculum and in terms of, what it is that I've created, this is a prime setup. It's reversing at the gap, just like SPY recently did. It's extremely oversold. It's the same chart pattern. And it's not just reversing at the gap. But you see, part of the strategy that serves more of a purpose is, which is something that people don't understand with gap close reversals, is, you know, you could have a stock reverse at a gap when it closes this gap, right? And then you have previous resistance to react to support. But in terms of what makes this one special is you have a daily confirmation showing that it's going to have a reversal. Daily candlesticks are going to help dictate and set up a foundation for the next day's price action on where we're heading, whether it's a bullish or bearish trend day. But what makes it more special is the second part of the strategy. MCD is reversing out a gap. There's a daily chart confirmation that's saying it's likely going to have a bullish trend day, right? And in terms of the purpose that it's serving, it's not just reversing at a gap, but it's reversing at a gap with a daily chart confirmation where it's going to try to fill the gap that's waiting to fill above. So in terms of day trading with technical strategies, gaps tend to fill over time. And what you can do is you can trade it both ways. You can trade the gap close reversal, and then you can also trade the gap to fill, right? Because gaps tend to fill over time, and then sometimes they tend to reverse the gap. So it serves more of a purpose when it's reversing out a gap, and then there's a gap to fill above. There's less of a purpose if there's no gap to fill within the side of the reversal, because gaps tend to fill over time. So write that down. So that's what an A plus setup looks like. That's what the best setup at the best price looks like. For those of you wondering, it's a very key oversold level, previous resistance to react to support, many gaps to fill above. Could be a delayed reaction where SPY recently did this in terms of this week. So keep an eye on MCD heading into tomorrow. And like I said, man, there's going to be many more plays on my radar heading into tomorrow. Now, in terms of the trades, let's get into this, man. I'm going to walk you through the trades, man. So in terms of the overall trades, I'm going to walk you through this step by step. As you can see, this is the updated key levels with market game plan, right? So in terms of the X, that's just a zone that we're not really interested in trading in a sense. And it shows you exactly where to be going long, where to be going short, newly updated key levels, right? So you can use this in the nightly game plan to your advantage as well. Now, in terms of the overall system, I'm not going to be going all over all this, right? So this is a real-time zero-date options trade alert system that can consistently make you money within the overall stock market. So in terms of the trades, these are the trades that we ended up making on the day. Tesla, we had Tesla 395 puts at 9:31 a.m. So if you go to these Tesla puts, you're going to see, man, the market open trades on inside of Team Roar. They tend to be some of the best trades on the day, and you could literally just walk away and call it. So in terms of these Tesla puts here, you're going to see, man, extremely far out of the money. This is where we got in, literally towards the lows, and they quickly went to 127 cents a contract. So this particular trade went from 79 to 127 cents, right? This went up literally like 60, 70% plus. Now, with that being said, in terms of the next trade, we had 597 calls. So the first trade was a nice win. The second trade was an L. This one simply did not work out. That was an overall red trade. Now, in terms of the next trade, man, you're going to see right here. So I'm going to walk you through this. In terms of these testicles, they did go all the way to, as you can see, 140 into the morning. And they also went to 160, which is crazy. They ended up dropping back down towards the previous closing price. I told you to watch that. In terms of the option contracts, man, a key level on the option contracts, if you're seeing a massive move on the option contracts where they're going up multiple 100% to 1,000%, if they drop back down to the previous closing price, study the market, study, the overall ticker, because it can potentially reverse at the previous closing price in the option contract. I'm telling you, if you're seeing contracts going up multiple 100% to thousands of percent, and then they drop straight back down to the previous closing price of that contract, that's a key level to be trading that contract. So keep that in mind for potential reversals. If you're seeing a reversal confirmation on the overall ticker, that could be a great play. Look at this, man. It just kept on reversing at the previous closing price of the overall contract. That's best when the contracts are going up multiple 100% to thousands of fucking percent, man. It's a good chance it could potentially reverse there, but use the confirmation on the overall chart. So it's just something you can combine with on the overall option chart, watching the overall prices. Another thing is, if you frequently watch the prices moving on the contracts, it helps give you a better direction on where prices are heading as well. So in terms of the next overall trade, we had 595 SPY calls for 10:58 a.m. If you go to 595 SPY calls at 10:58 a.m., you're going to see right here. This is where we ended up getting in. So we got in right here, literally towards the low, and these calls quickly went to 50 cents a contract, right? So that was another win. In a sense, man, like in that particular situation, like I said, 595 calls, that was the wrong overall situation. This is what I was referring to. We took this trade twice. this is what I was referring to right here at 10:58 a.m. This is where we got in towards 50 cents overall range, right? So if you look at the overall timestamps, everything's 100% in real time. 10:58 a.m. This is where we got in on 595 calls. Like I said, we entered them twice. I'm going to be going over the second one here shortly. But this is where we got in the first time we entered, and it quickly went to 90 cents a contract, right? So it went up 80% plus, and your profit stopped out right here into the 80-cent range. So that was another win. Make sure for those of you who are inside of Team Roar that you're setting profit stops when you're up 15% plus. Now, in terms of the next overall trade, I'm going to walk you through this, man. We did end up having 5985 SPX calls for 180 cents. This one, as soon as we got in, it went to 200 and then it just sold off. So in a sense, it really didn't work out for the most part. Spiked very, very quickly and then it just flushed. But in terms of the next trade, we had 595 back-to-back wins. We had 595 SPY calls for 40 cents at 12.19. So if you go to 12.19, this is where we got in on that overall second trade on 595 SPY calls towards the exact lowest perfect timing again. And then it quickly spiked to 50 cents. So that's another phenomenal win you could have had, over a little bit over 25% on that. Now, in terms of the next trade, we had 592 SPY puts for 54 cents a contract at 1:17 p.m., right? So if you go to 592 SPY puts at 1:17 p.m., man, you're going to see a lot of the trades we've been having in the middle of the day, they've been going up multiple 100% to 1,000%. In last night's recap that I showed you, we had two trades that went up over 1,000% back to back towards later into the middle of the day, which is fucking crazy, man. A lot of people don't like trading during lunchtime, right? But with that being said, in terms of this trade, this is where we got in, right? So in terms of this overall trade, I'm gonna walk this, I'm gonna break this down here for you. At 1:17 p.m., 592 SPY puts. This is where we got in the puts right here, literally at the exact lows. It went from 50 to 150. And in terms of this trade, you should have been profit stopped out for 200% because it just kept on going straight the fuck up. You know, when a trade's just going straight up and then it finally has a decent pullback, this was the decent pullback right here, you should have been profit stopped out in the 120s. This right here is not a big enough pullback for you to really be profit stopped out. This right here is more of a bigger pullback where you're stopped out, likely around 115 to 120 for nearly a 150% profit return. Now, with that being said, in terms of the next overall trade, let's get into it. 593 SPY calls for 40 cents a contract at 2:06 p.m. So if you go to 593 SPY calls at 2:06 p.m., you're going to see this is where we got in. As soon as we got in, it had a small move up to 50 cents, dropped all the way down to 25, and then it went to 70 cents. So you're either profit stopped out for a small win, or you're holding for the bigger win because we don't use stop losses, and then you're selling for a bigger win, right? With that being said, make sure in terms of risk management 101, you are putting in your max risk per trade as your entire value and position size into the contracts. The most you're risking is your max risk per trade, right? So if the contracts expire worthless and go to zero, most you're risking is what you're putting into the contract. Your max risk per trade, a couple percent of your account. The most you can make is unlimited profit potential. Every single month, we have multiple trades where we make 1,000%. The percentage gains are always going to outweigh the losses. We can also afford losing streaks. We can also afford multiple L's in a row with this overall system. The percentage gains will always outweigh the losses, right? And you're gonna see, man, the fucking win rate is fucking insane. So that's just the icing on the cake. But with the foundation you have, with the foundation that we have, with risk management 101, right, and along with the massive gains, you don't need a high win rate to be successful with far the money option 0-day contracts. Now, in terms of the final trade, I'm gonna show you this, man. This is the next trade that we ended up taking, right? So that trade worked out phenomenal. 593 SPY calls, 40 cents, all the way to 70 cents. 5955 SPX calls for 175 cents at 3:15 p.m., right? So in terms of the 5955 SPX calls, if you go to 3:15 p.m., so I'm gonna walk you through this. This is where we ended up getting in on these overall calls, right? So in terms of this overall trade, right, we ended up getting in at 175, and it was basically break even. It went to 190 and then it sold off. So you're either barely stopped out for profit or it just didn't work out. Wasn't our best day, but overall we did fairly well in terms of like the win rate and the percentage gains. GR did extremely well in terms of like the day, man. Like fucking SPY, man. It was not easy to be trading today, man. It was so fucking slow and fucking choppy, man. But GR did fairly well. In terms of my overall trades, This was one of my worst trading days. I basically waited until power hour to trade, and I tried just to buy calls like 3 times, and none of the fucking trades worked, man. So in terms of my own personal trading, I'm red on the day. The 30-minute candles simply wouldn't flip to bullish, and the timing was off. So my personal trades, it was simply red. And it was fairly difficult to be trading during the overall power trading session. Now, for those of you who are serious about making money, it's the first link down below in the description. If you would like to join us inside of our secured private organization, we are absolutely crushing it on a consistent basis. In terms of what you get access to, you get access to a real-time zero-date options trading alert system backed by multimillionaire, right? You get access to our trading community where you can trade alongside and network with multimillionaire traders, right? You can also chat with us, with Giro and I within the chat, right? So it's the first link down below in the description. The beauty of trading far out of the money option zero-day contracts is they're extremely low risk. They're extremely cheap and low barrier to entry. Great for small accounts, also great for rich people who like to pay less, risk less, make the biggest percentage gains within the overall market. Let the holding of the trade and the percentage gains of the trade do the time for you instead of taking massive position sizes where you never hold the trade because you're sizing in so big and you have a tight stop loss where you're not going to be able to hold the trade, get stopped out for profit, make small wins. We do the complete opposite. We don't use stop losses. We put in our entire position size as the max risk per trade. So the beauty of these options is we know exactly how much we're going to lose. The most we can lose on a zero-date option is what we put in. What we put in is our max risk per trade. Max risk per trade is a couple percentage of our account. We have the highest win rate in the game doing this, and these are the biggest percentage gains within the market with the cheapest, lowest risk contracts, right? And then in terms of adding to winners, when we're up a little bit, we add to winners to increase the overall gains. One small winning move in our direction, set the profit stop, green to red, won't happen. If you set a profit stop and you're up on a trade, you get stopped out for profit. We move the profit stop up higher to ensure that we don't get back the bulk of our gains. We sell into the moves, we sell into the key levels, we leave runners that are not attached to our profit stop to sell deep in the money for the biggest percentage gains. When we're down on a play that's down over 50%, we do not get stopped out. We always hold the trade. Vast majority of the trades, we will rarely sell for a loss, and we will never use a stop loss. We basically hold the trade. Once the trade is green, we either add or set the profit stop or do fucking both, get stopped out for profits. If we're down 70, 80, 90% on the play, vast majority of the times, we will just hold the trade. If it expires 0 and go to worthless, the most we lose is our max risk per trade. Vast majority of the times, the trades tend to go up. Even if they're down 50, 60, 70, 80, 90%, they come back to life, they go up, sometimes they go in the money. So as long as we're setting those profit stops when we're green, we're stopped out for profits. And when we are down big percentage on a play, the second play that we make, right, is typically aligned with the trend, and that second strike tends to be timed perfectly with a massive win. So we'll typically look to size a little bit heavier on that second overall trade. But the point being is, man, if we're trading the trend, the trades are going to come back to life as long as we're right about the side of the trend. So even if we're down 70, 80, 90%, we're still going to win. Obviously, we're going to win less percentage-wise because we didn't time it perfectly and get the best entry. But on that second strike, it's like we're going to time it amazingly and fucking kill it if we didn't on the first one. And the way we're going to increase our wins as well is by adding to the winners. So if you are serious about gaining access to our secured private organization, where losing is a personal choice and having red days is a personal choice, it's the first link down below within our description. Within the description, this is a group where we are winning and printing non-fucking stop. Who the fuck do you know is printing like us at the speed of fucking light? Absolutely fucking nobody, man. Nobody is fucking printing like us. Every single day, we are experiencing the biggest wins in the market with the cheapest low risk. That's how trading should be. Many traders, especially when they join our program, are going to realize that we're doing something that nobody else is doing, and it's completely different. And this isn't just buy and sell alerts. This is a strategic trading system. So obviously, it's going to take time to adjust to our format, and it's not going to be for everyone, and it is very real. Some people are going to realize that, wow, these guys are beasts, and trading's just not for me. It takes a long time to figure it out. But for the people who do figure out our format, they tend to win, and they tend to win fucking big, and they tend to be very consistent. It's obviously not going to happen overnight. We have over a decade of experience do this, and a lot of people are going to have to rewire their brains and let their emotions go and remove their stop losses to see fucking results. You know, a lot of rewiring is in terms of just things you've experienced as a trader. Like I said, Most traders buy and sell quickly. They scalp. You understand? So if you're buying and selling quickly, you're usually not winning big percentage wise, which means they size in big so they can make a quick buck in a short period of time. Problem is, they get stopped out for losses all the fucking time. Another problem is they never win big. If you size in big, if you risk too much, if you set a stop loss, you are positioning yourself to never win big. And the fact and the reality of the stock market is there is trades every single day that you can make where it's highly predictable to put yourself in a situation where you can win massively with risk management 101 and far out of the money 0 to 8 option contracts. That is the only way possible where you can consistently win within the market with proper risk management. If the first strike doesn't work out, if we're trading the trend, it comes back to life, we'll still make gain. Second strike, massive fucking gain. We time the first strike right, massive fucking gains. It's like you're not going to be able to do anything like this in terms of risk management 101 and biggest percentage gains in the market with far the money option contracts. So I'm telling you, for those of you who are serious about making money, especially if you have a small account, and for those of you who are rich and prefer to pay less, risk less, and make the biggest percentage gains and trade and win all fucking day, this is the best fucking group for you. And optimizing, in terms of you who trade with real money, for 0 to 8 far the money option contracts is the best thing to optimize for. You can have massive wins every single day. You cannot do that with shares. You cannot do that with penny stocks. You cannot do that with in the money option contracts. The best asset class to optimize for as a day trader is far out of the money option contracts. The beauty of far out of the money option contracts is they give you the most options to adapt, to survive, and to win within the overall stock market. Very cheap, very low risk, biggest percentage gains in the market. Since they're very cheap, you can put in your max risk per trade as literally just one contract, as the entire value of the contracts. Worst case scenario, you lose your max risk per trade. So basically, you could think of our stop loss as if the contracts never go green, because when they go green, we set our fucking stop loss. If the contracts expire worthless and go to fucking zero, then the trade didn't work out and we lose 100% what we put in. What we put in is our max risk per trade, a couple percent of our account. And the way we increase our winnings in a safe way is we do like to add to winners, because when we're up a little bit and we see a winning confirmation, 9 out of 10 times, it's going to be a massive fucking win. So we just quickly add to the fucking win when it's time to add to the win. And we set a profit stop. One little move in our favor protects our new average costs and increases the fucking gains. And when we're down on a play, we buy a second strike. So basically with us, instead of using a stop loss, you're going to trade the trend and you're going to buy that second strike when we're down in the first place. You're going to hold the trades. And when you're green, you're going to set profit stops and you're going to leave runners to sell deep in the fucking money. The only way our trades are not going to work out is if the trade expires worthless and goes to zero, is if the trade never goes green. Because when we're green 15% plus, we set a profit stop. We have from market open till market close for the trade to go green. We are right about the trend, 9.5 out of 10 times. We're going extremely far out, but not far enough to where if the trend goes in our favor, it doesn't go deep in the money. It tends to go deep in the money with the trend, right? So we're buying the cheapest, farthest out of the money, low risk contracts you're going to ever see, and we're fucking killing it nonstop trading the trend. Listen, man, if you're serious about making money and you're serious about being in a disruptive community, in a disruptive options trading alert system that is making fucking money and printing non-fucking stop, 10 years of experience, multimillionaires, is the first link down below within the description, man. We're absolutely crushing it. With that being said, I'm going to be signing off. Tomorrow, we are going to fucking destroy the market. We tend to trade best on Fridays, and I'm telling you, with this MCD setup and the way the market's setting up, we're going to be having a big move, and you're going to want to be in here heading into tomorrow. So I would highly recommend that you join our secured private organization if you are serious about learning something new and trading alongside us. We have many, many members, hundreds of members who've been with us for over 15 months, and many more members than that. And I'm telling you, they're dedicated to mastering this overall system, right? And who better than with people with 10 years of experience, multimillionaires who are fucking creating systems, not just buy and sell alerts, but systems to make people money consistently in the safe way, in a cheap, low risk way, with the biggest percentage gains. Very strategic, man. So the way to learn how to trade is to trade alongside us and get experience with us in the overall system that we work on improving each day. It's going to keep on getting better as time goes on. The sooner you join, the better. The sooner you start to gain experience, right? The sooner you plant that tree, the better. This is the best style of trading that you can optimize for. And you're going to see nobody else is doing it like this, man, with a strategic system. I'm going to be signing off. It's the first link down below in the description if you would like to join us.